Hi, and welcome to another episode of Who We Are. Our Department of Tax Consultancy is your partner in tax compliance. And if you're running a business in Kenya today, then you are familiar with the uncertainty of the tax landscape in Kenya because in almost every year, under a Finance Act, tax laws and procedures are amended, and there is never a guarantee that the tax laws affecting your line of business will not be changed. And that is why businesses really need to be up to date with all applicable tax laws, rates, and other regulations affecting them. In this video, I'll make a short presentation discussing corporate income tax, highlighting key elements of this tax as it is currently. Uh, Corporate income tax is paid by all incorporated businesses in Kenya. Under the Income Tax Act, incorporated entities include number one, resident companies, meaning a company incorporated in Kenya under the Companies Act and other relevant laws. Number two, resident companies that are running business activities outside Kenya. These are taxed on the income derived from outside Kenya. And number three, non-resident companies on income that is attributed to a Kenyan PE. Now, corporate income tax is charged on taxable income declared upon a statutory financial audit at the end of an income year. This taxable income is arrived at after deducting the allowable expenses from the gross income for the year in question. Then expenses are deductible if they are completely and exclusively used to produce the taxable revenue. The Income Tax Act, Section 15 identifies allowable deductions, and then Section 16 goes on to specify deductions that are not allowed. And we can illuminate on income tax deductibles in a subsequent video. So, what is the corporate income tax rate? Currently, and after the enactment of the Finance Act 2023, both resident and non-resident companies now pay an income tax at 30% rate. Previously, in the prior to the Finance Act 2023, non-resident companies were paying a 37.5% income tax rate. Now, when is corporate income tax paid? Corporate income tax is paid after the end of an income year, and subsequently, companies are required to file a return on this tax. When to pay and file the return depends on the company's accounting period. However, in Kenya, a conventional tax year is basically a calendar year. Therefore, most companies have a January to December income year or an accounting period. So the corporate income tax is due on the last day of the fourth month after the end of an income year. Conventionally working with a January to December income year, then the income tax is due on the 30th of April of the following year. The corporate income tax is typically settled using, firstly, an installment tax, and second, the amount that remains unpaid after all installments have been paid, is determined and then paid on or before the last day of the fourth month after the end of an income year. So at the beginning of each year, a company must determine an installment tax, which is considered to be the higher of these two. Number one, an income tax relative to the estimated profits for the year, and two, 110% of the last year's income tax liability. So, in estimation, what's your expected profit for the year, and how much would your resultant pay? Or 110% of the last year's income tax liability, the two, whichever is higher. The installment tax identified is then paid in 4 equal installments and is due on the 20th day of the 4th, 6th, 9th, and the 12 months during the year of income, meaning on the 20th of April, of June, of September, and of December. That is for companies with a January to December accounting period. At the end of the income year, the actual corporate income tax payable is then determined upon a statutory financial audit and the balance of tax due, and this is the difference between the total tax payable and the installment tax paid in the year of income, then that amount is then paid by the last day of the fourth month after after income year end. Companies are required to file. Companies are then required to file their annual income tax return within 6 months after the end of the income year, which means on 30th June. That is for companies with the January to December accounting period. We hope the content of this video helps your company, especially as we approach the close of the 2024 income year. And so in your checklist of compliance as pertains to your income tax liability for the year 2024, check with us that you have paid the first 3 installments for this year and you're prepared to pay the last installment, which is due on the 20th, which is approaching fast in about 2 weeks. And 2, you have all your expenses records for this year properly documented, and all accounts that are related to these expenses are completely reconciled to make sure they are correct and usable. And also that you have appointed your company a certified auditor to conduct the statutory annual financial audit for 2024. Now, we have listed for you the different ways we could help. In our mission, we share a professional guidance to support our clients meet their tax compliance requirements, and so we are open to responding to your questions, engaging with you for professional services, and generally just listening to you. Thank you for your continued support. Please subscribe us and help us reach you better.